individuals that I'm getting to know better. Wow.
You know mostly everybody so far. All right. We'll give a couple more minutes for everybody to trickle in. I think everybody was surprised how good the weather was this weekend.
That was beautiful.
All right, where is Mr. Mike Bailey?
Okay, Kalina table, because you need to use your heart. Idris, sit down. Kalina, Idris.
Morning stuff in the household with kids. All right, let's see this here. Oh, Mike is here. Mike has the power. Yeah.
We'll see. Good morning, good morning.
You still in Austin, Mike?
Yeah,
Yeah.
get back tonight.
Morning, everyone.
Good morning, Schreier. How are you feeling, Schreier?
It's good. It's good. Medication does wonders, right? So I've been
Yeah.
taking a bunch of meds and we'll see. Well, it isn't that bad though. It worked out, right? Yeah. All right. Video. Okay.
I see the cleanup happening. Thank you, Mike.
What was that?
I said the cleanup's happening. Thank you.
Oh, yeah.
You know,
You
I
can kick
see a
off
new
whenever you want to.
it keeps coming back. It's like a persistent
One on my sound.
AI.
I'm very worried that you would.
You guys might want to make a general statement regarding those note takers because there are some folks that I'm aware of that have been trying to use them, and they noticed that they started getting kicked out last week and they kept trying to reinstall it. So if that's something that you don't want, you might want to just make that known.
We have made that statement here I think every time we do, but I
I'll
think a lot
continue
of
to
these
make that
have a
statement, yeah.
default those on their Zoom accounts,
Yeah.
so it happens. But I mean, it's okay on all the other calls. But this one also, as we clean up, I guess we would be okay. Little bit at a time.
That's how you eat the elephant, one bite at a time. Although I'm not sure I would want to eat an elephant. A big elk, yes.
Yeah. All right, 9:04, we can get started. Are you okay,
Yep.
or you want me to?
I'm fine. Let me share my screen. We'll go from there. I think I have everything set up. My laptop behaves differently when I got dual screens when I go online and offline. It goes okay. All right, so that was number one item. No bots. It's open for open to Inner Circle and Massive Masters. So we'll continue refreshing everybody's memory that hey, this Monday call it's a no bot call, and right now we're happy to say it's only for Massive Masters as we go. So we don't have any new members, I believe, Mike,
Yeah.
right?
Sure. Can I add one thing here?
Please, please.
Likely for everybody, the Massive Masters here, likely for next week's call, we'll change the password so that it becomes exclusive for Massive Masters only. So, we'll communicate in our community channels. So just watch out for that change, either the link change or password change. And anybody who's not a Masters would be out pretty much. Maybe any one or two very select if they really somebody be a partner on actual deals, we may allow, but I think it's going to be pretty much no outside non-massive masters anymore from
Thank
next
you.
week.
Yeah. And just once in a while, we may invite some of the folks come in who is typically a larger equity or debt fund, wants to know a little bit about what we do, can come in for 1 or 2 meetings just to kind of get a flavor of it on the back end, right? But mostly it is going to be for massive masters. Thank you, Sanjay. Okay. Let's get into Mike. Please help me out here if I see anybody new. I don't think so. We have anybody new here, right? So
No, no,
we're not gonna have that. Okay.
no.
So let's get into the rate forecast, and then I'll talk a little bit about the NMAT, what happened, how did it go, and I'll try to collect more information from the ICSC as well. So 2 big events that happened last week. Debt side, this is where we at. We have another Fed's meeting coming up in 2 months, in a month or so. So we don't expect the rate to drop or anything like that. That should stay steady. And then that's the case for next 2. But there may be a chance in May there's a 1 reduction, but we'll see. But you can see where we at. Its market is pricing in not too much of a rate reduction this year. Maybe 1 middle of the year, Q3, Q2, and 1 at the tail end of it probably could happen. So 2 rate cuts as we look at it. So the higher for longer, here we are. And then that will continue to do so, right? So as we underwrite it, we still like, from massive side, as you guys know, we like higher interest rate products. Then we work our way down to the lower interest rate products as we go. So that's there. Rate on the bridge side, I've seen they have stabilized to between a 9 and a 10. If you go up higher with the higher leverage, I've seen upwards of 11 or 12. But our philosophy has been when rate goes up, it's a seller problem, not a buyer problem, which is usually rightfully, the appropriate amount of debt as you go. And you'll see a dominant chunk of people will try to underwrite with an agency debt. And that's our second pass, not the first pass. And I'm reiterating, given the economic cycle, we should bias towards underwriting deals that has higher interest rate, which is a bridge debt, which is a fund, and then which is a credit union, then work our way down to the agency debt. It does 2 things. It puts you on the side of the market. So the market gets better, your arbitrage gets better, financial arbitrage. And then if you do the operation value add, you are comfortably in the profit zone on top of the reduction of the interest rate. Okay. That is on that side. And Sanjay, if you want to add anything, please jump in. And we'll go from there. I see Leo with me. Okay, so then I will switch it to next step. It's really, no, one more thing I want to add before I drop into the NMHC, which is, so we have a bunch of tariffs coming up. The question is, what is the impact of the tariff and how that's an impact? We kind of sort of know, right? Again, it's gonna be a trade war, and everybody will hold their ground. US will do it, China will do it, we will do it. Then the Mexico and Canada will do it. Ultimately, we'll foot the bill. Now the question is, how much is the bill that we're gonna foot? This was published yesterday by John Burns. Wanted to share a little bit more. I want to walk you guys through. Those guys are pretty cool. So hardware, so any kind of a bathroom, toilet stuff that we buy, as you can see, depending on the country where we at. So our import reliance is about 43%, roughly. So this is the Canadian version. So you can see the spread between a 10 and a 30 is roughly 20% comes from Mexico, about another 30-40% come from China. So whatever impact that we do in the Chinese imports, that's where we're gonna be. What we really look at the plumbing fixture right here, the plumbing fixture, the bathroom, toilets, the kitchen stuff that we do, it's all come from China. So pay attention to what the tariff goes into China, which is roughly about 25%. You can see here. The household appliance doesn't really matter for us on the real estate side. Electrical, it's mostly China. So what it's going to boil down to that if we do a lumber-based product, it's the Canadian tariff. If we do household repair, the rehab type stuff, and metal buildings and plumbings, that's from China. So two countries that will be impacted by it's the Canadian tariff on us, or our tariff on Canadian products for new construction, and also our tariff on Chinese product for anything rehabs, flooring, material, everything else. So what the words or the number that I've seen floating around, it's around 25 to 30%. That's one. And the back end, what we're seeing in the other area is the raise that's being done by ICE. So that resulted, I think, a whole bunch of home builders, they sent a letter to Trump administration by saying that roughly 30% of their people are undocumented folks. They are providing labors. So if we go after that segment under the name of immigration, then the priority of the houses or the affordability of the house prices will go away. So it is interesting. We'll see how that plays out, right? We can debate about it, but it is what it is. I was talking to a couple of home builders on my way from Austin yesterday. The angst is real. You'll see the people a little bit more jittery and in Houston area where a good chunk of the home builders, they use the laborers that come from Mexico, and they're a little bit more nervous, and they'll see how the prices goes up. So for us, we'll get impacted both ways. The labor, as of now, we haven't seen a shortage yet. We'll see how that continues. On the other side is the price of lumber and some of the material. Larger home builders, they pre-bought as much as they could. They're still buying it. It's going to boil down to someone who goes to Home Depot, someone goes to Lowe's and trying to buy 1, 2, 3, 4, 5, 10 houses at a time. So that's the dynamic of it. Again, short term, there's going to be a little impact. Long term, we don't know. So tariffs are good, but to be good, you have to pay the price to get there. So it's going to be kind of sort of interesting to see how that plays out. So
Yeah.
from a massive side, go ahead, Sanjay.
Hey, Shar, a couple things on this chart that you have on the screen. Just to clarify and correct me if I'm wrong, at the top there is the import reliance number, which is different from the percentages on the y-axis. So
right.
for the hardware, only 43% is imported, 57% is within United States. Out of the 43% that's imported, it shows which country is that imported from. Is that right?
That's right. That's right.
Right. Similar thing like glass and glass products, only 20% is imported. Rest is within United States, and out of the 20% imported, 60-ish% is from those four countries. Rest is from rest of the world. So, this is a great chart. This is very interesting information here. So yeah.
So our cost is going to go up a little bit, right? Between 10 to 30%, depending on where you're at. So cost is going to go up. So just be cognizant about it. So price that in. So we are pricing that in. Anything that we do as you kind of go. So don't get emotional about it. It is what it is. It's a macro driver. We just have to go through it. Okay?
Yeah, and on the tariffs and everything else, there's this whole thing about there is the businesses in between in United States, right? So as consumers, for us as home builders, repairs and stuff, the big variable that we will see is, do those businesses get squeezed where from an economics perspective, everybody's taking this very vanilla supply demand type of view where, yes, the supply will stay the same, the demand will stay the same, supply becomes more expensive, so your prices will go up. But as prices go up, demand will go down, plus the businesses that are in between may absorb some of those tariff costs, right? If they do, then as consumers, we reduce our demand, our consumption, and the businesses import. So overall effect, this microeconomics, one of my favorite subject in business school, I did so much. But in the real world, those supply-demand curves How they will roll out, we will see now. So this is almost like an experiment to me to see what happens when it rolls out. With that said, one of my property last week, my plumber, there was a broken water heater. My plumber could not find a pan. The pan for the water heater, all like he went to they went to 10 Home Depots, 5 Lowe's. They could not find a pan. I think they ended up finding it like some remote Ace Hardware, but I don't know. It has anything to do with what's happening here and people stocking up last week or not. But that was a big surprise. So anybody who's in the real estate portfolio is doing things, be mindful for this week, next week, or whatever. The supply may be in tricky situations. Back to you, Shrai. Thank you.
Sorry. So the larger guys have been planning on it, right? We know it's coming. It's the smaller teams. They're not gonna have the supply chain. So it, for a couple of weeks, a month or so, we'll see initial blip, but then supply is gonna come in. We'll be okay. Okay, so I see Leo is here. So before I jump into NMHC, I have a big set of notes. Leo, you want to share a little bit more of what you have seen last weekend? What was your takeaway, if you are available?
Oh, yeah. Hey, good morning, everybody. Yeah, so yeah, last week we it was fun. We met a lot of brokers, met a lot of lenders and the insurance guys, and Sharia introduced me to a lot of top brokers and lenders. And I talked to Paul, where he gave me a lot of insight regarding the market and the deals that are going to be penciling and the approach that we're going to be taking, or he recommended that we should take as far as deal sourcing is concerned. So what I got was that most of the best deals, the brokers, they were talking about the secondary market, which is gonna be the best market right now, because of the standard of living in the primary market. Like most of like let me just say Dallas, Texas. You have the big BlackRock and all those guys are gonna be looking at those markets. So it's good to move to the secondary market and sometimes the tertiary market where population are moving into those markets. So those are the markets that they were talking about. And then also for the lending, they were saying that the capital raising is very difficult right now, but there are good deals that are going to be coming. The loans are going to be coming due. Like I think they were saying that almost like 500 billion or something like that loans coming due, where there's a lot of opportunity that is it's on the plate. So it was a great conference. I really enjoyed everything about it, and thanks Sharia for introducing me to all those guys. So
Okay, this is my third one. I still feel like it's an iterative process. First one, I went, there were more than 15,000 people. Second one, that was in Vegas. Second one in San Diego. We started meeting some people. Last one, I mean, which is last week that I went, it was the third version of it. I felt like first time I was able to do some planning and had enough relationship to continue with it. So it is interesting to see how Leo went through a version of what we went through. So let me share my other screen. Yes. All right. So these are my notes. Give me a second. So on that note, we'll slowly take up anyone from the masters who own an asset and owns an asset. That's where you go. The whole idea is that this is when you come in, you say, "Hey, I own asset. I am running it." Mostly for operators there. And then let's go have a conversation for the second go round. So my notes are this. Let me know if you can see it. So who we met, JLL, CBRE, Gria, Marcus and Millichap, Collier, Arcadia, Greystar. I shook hands with them. Thanks, Sanjay, for coordinating some of those the meetings. Mostly the brokers we talked the most. Then we targeted mostly these apartment brokers in Texas and Carolinas. Debt side, I'm at Arbor, I'm at Capital One, a couple of debt funds, couple of equity funds, decent amount of debt brokers, service providers that sell insurance products and a bunch of other stuff, and other owners that we met, small or large. So it was a good one to go. Larger organization, they'll have their own events as you go, and that event works out. I'll give an example. Marcus and Millichap, we went. I was introduced to a couple of guys. Gria event, we went. We ended up talking to someone who owns like 6,000 properties, got a couple of assets and sell in Houston. Him and I, we ended up talking. Then we met some of our sponsors, our partners, our McCallum deal, the family office we worked with. He was there. He was negotiating his whole portfolio refi with Arbor. So that was some good conversation. So all in all, it's shake hands, try to see what their ideas are, and kind of get some of the nuggets out. So I'll give you some of those nuggets. So I'll start with the tough news, then I'll work your way up to the better news. Exhaustion for the smaller and the mid-sized operators were real. People are tired. Return on effort, the multifamily and the floating debt, and they have funded whatever they could have funded, but it was real. You could see, number one, that everybody, not almost everybody, they bought floating debt product, they brought in money, especially the larger one, and now they're trying to figure that out. Inherently, on the other side, buyer pool has shrunk quite a bit, so competition is very less. So everyone is trying to have a long-term view, but struggling to figure out what the long-term view look like. 12 months at a time, that survive till 25, and then pay your bill till 2026, something like that. But they were struggling to see how long it's gonna last. Even though the new government came in, the rates are there. Expectation was that rates gonna drop a little bit more. Market's gonna get on the clean side. Equity will be available. And now you have the tariff, you have the GDP reduction and the government job cuts. It's going to add a little bit more fuel to the fire, and adding a little bit more smoke, trying to, things a little bit more convoluted. So people are struggling, but they're trying to have a long-term view because they understand that we'll be out of this mess this year. But once you get beat down for the last 2 years, it was struggling. So too many, and the interesting thing was the brokers. Too many brokers are brand new. They're young, mid-30s. They don't know diddly squat about a down cycle. They showed up 4 years ago, 5 years ago, and they're trying to tell you what's going to happen in a down cycle. And you ask them fundamental questions, they don't know what to do with it. So it was really interesting how young brokers and trying to stay ahead, don't get me young and dumb, right? It shows up there, mid-20s, early 30s, not in a finance business, trying to show up, made a lot of money. Now they're struggling. Those guys, we had to hug in the kids to get in front of them. Now you text them, they show up, just to get a deal done. So it was really cool. But the older one, the mature one, they know the play and they're doing the right things. And I'll walk you through what happens. So here we go, number 4. The mature operators were doing the right thing. They're doing deals. There was Paul and his partner have 2 deals on the contract, Class A multifamily, 4 years old. 165K a door. One is 95 million, one is 65 million. The deals are happening depending on the debt and equity size of it that is there. What we do understand, that people are focusing on a Class B. I'll give an example. Class A, too much money, right? That's the BlackRocks of the world. Class C, that's what the retail syndicators have played, and now everybody understands the similar thing. Class D is a lot of work, so we're converging into a Class B. All of a sudden, the smaller buyer pool is clustering around the Class B area. And then in the Class B area, Class B assets, they're typically pricey, but everybody understands the equity needed to buy Class B areas. So they are inherently going down in a smaller Class B areas. So you'll see a decent amount of competition this year on a sub $15 million, sub $10 million deals who are pretty young. That's what we see already in the DFW area. We're starting to see other areas as well. Also, Class C, we should have a price reset if lenders elect to bring the properties to market. So we have seen quite a bit of lenders, they're talking it through to bring it to the market. The moment they come back to the market, the price is going to be reset on a Class C. So whole idea about a Class C, this idea is that hold off for a Class C for 3, 4, 5 months or so, see what happens. Or if you get into a Class C, make sure you have lenders staying with you for very high leverage. That's there. Lenders are gearing up for takeover. 2024, nobody wanted to take over any assets. They said, operators bring in the money. It is interesting. Our opinion has been, you are the operator, we are the operators. We need to protect everything we can. Nobody's our friend. One time is bad, which is harsh way of saying it is reality. So last year, almost every single lender allowed loan extensions, mods, and things like that. But this year, can you go on mute? I think there is a background noise. Thank you. So this year we're seeing that if the assets not worth fighting for, or these operators aren't liquid enough, they're gearing up. So a lot of chatters about loan mods and things like that. It looks like the Q3 seems to be the target. Timeline for Class C assets. Going back to what we're talking about here. Insurance is coming down quite a bit, but if you're in Florida and California, absolutely good luck. So we'll say the Texas is getting stabilized. Texas seems to be they have stabilized. Some part of coastal area not quite, but overall Texas have stabilized. San Antonio have stabilized. DFW have stabilized. Same with Austin. Houston is almost there, depending on where you're at, but not in Florida and California, and especially Florida. Florida was a hot topic item for almost everybody. Operators are driving into small asset size that we talked about. Retail equity is tough. That means if you are a syndicator trying to raise money today for larger deals, that is tough. So in other way, if anyone fully trying to raise $3 to $5 million and they don't have a team, they don't have a partners, tough luck. And that's the reality. On the flip side, debt and smart or unemotional equity, which is the pref equity, are plenty available. Plenty. People are dying to give you money because you know what? Deals are not happening. They have equity to deploy. If they don't deploy the equity, they don't get paid, and they're trying to find the right deal to deploy. But guess what? There's not much available that pencils out at that. So we have seen that's where we at. Debt fund rates I've seen from 8.25% to 10%, 11%. Pref check from a 14 to 17%, and then now if we pay 17% pref, LPs get 3 or 4% more, which is 19 to 21%. For project to have a 21% IRR, 21% return for LP, 17 for pref, it needs to be 23 IRR. Not that many deals available. So whoever has the money, balance sheets, and have the access to liquidity, they will come and pick up the best deals. So overall, deals will continue to happen this year. The balance sheet and the liquidity will take the best deals. And when a deal comes to the market, the relationship that we have, and that's going to come into the play. So when I talked to all of them, my pitch was Massive Masters. We'll do 5+ deals a year. So brokers, you can pick a side to go talk to the new person, the brand new who showed up, or you can come hang out with us, give us a little bit more extra red carpet. So when you come do a deal, that deal makes sense. And ultimately, it's unhappily ever after. That's how we're gonna do the deals. Everybody had a crack at it, but it was a good conversation all in all. So overall, the sentiment is this is working for us, right? If we're looking to get multifamily as we're looking into, we should be able to get good assets and a good pricing as you kind of come in. And chances of replicating the version that everybody's going through will be very less because they can control the pricing and how we're gonna take. On that note, don't be bullish on everybody's idea was that look, a lot of Class A's are coming up. As Class A come online, Class B will get the pricing pressure. So if you underwrite at a inflation, not a inflation plus a market improvement for 2025 and 26, you'll see how that balances out. So Class A's will reset the pricing for multifamily this year. So all in all, inflation is the way to go, which is 3%, 2 to 3% rent increase. If you try to push more than that, you really have to have a strong data point to say, hey, next door neighbor charging me $300. I'm absolutely sure that $300 can be recouped by me. Then still, you don't go 100% off it. You're still a little bit below. So stay a little conservative. But all in all, multifamily, it's a good spot. As I was excited when I left, I was number one, less mumbo jumbo, less noise. Road is clear. Stronger will win. So let's go get some deals done. That's what my takeaway for from the NMHC. Sanjay, Mike, anything else you want to add, or we can go back to?
Yeah, sure. A lot of good information from these events are great, right? So like we said a couple of weeks ago here, most people, if you are focusing on multifamily, should add this to your list. If not this year, next year. If not next year, the following year. The amount of networking connections that you make is one of a kind at this NMHC event. This is huge. So from our side, we make sure one of us always goes. So that is big. And your comment about the underwriting, yeah, I think next 4 to 8 years are going to be very uncertain in so many ways. So really focus on that cash, right? As long as you have cash, your risk is lower, or you can manage these uncertain times. So I think we're going to see the market shift to that too, a lot more. So sellers are going to have to adjust that accordingly. So also, all the stuff that's happening, rents haven't quite kept up or gone up as a lot of economic data that has been indicating it should go up. So my view still is that rents are going to go up. Nobody can figure out the timing, but all the economic data is stacked up for steep rent increases. So, hopefully that's in the next couple of years. If not, then these underwriting that we do with cash is going to be our savior, right? So, but on underwriting, we're not underwriting steep rent increases. If we can't see evidence of higher rent to the current rent right now in the comps, I don't want to, we are not increasing rents, anything more than 2 to 3%. That's it. So that's a key to the all the underwriting. Of course, I think mobile home parks and RVs are in a different bucket than apartments. Those, I think, will continue to see the increase in rents as John and Sharon's been talking on a couple of their deals. So from a residential perspective, that's keep that in mind as you do these underwriting.
I forgot. So I ended up talking to a couple of people that we have met over time. Assisted living, larger ones, seems to be a traditionally popular item. Self-storage, the pricing has dropped quite a bit because they have, what the point was they were making is that the tenants are staying, but the rents have dropped by 10% ish. I don't know what the average number is. Hence, the prices of self-storage came down in a good spot. So if you want to get in, this is also a time to kind of optimal that. Interestingly, self-storage is being dominated by larger institutional versus 5 years ago what we had in a smaller, which is to me, flex-based type segment. Flex-based still dominated by mom and pop versus an institutional. So we'll see how that transition happens. But mobile home park seems to be, after assisted living, I heard a couple of people talking about mobile home park. Wasn't sure what the big or the scalability of it, but cash is really interesting. And so that angles it shows up.
Mhm.
Okay, good. So that is there. Let me go back in. So we talked a little bit about it. 30 more minutes. Okay, I'm gonna bring out the deal flow. Sanjay, you want to quickly recap what we have for the LOI and on the contract?
Yeah, so LOIs, the multifamily side, we're still talking that East Ponce Village. We have a call this morning. I reached out to a couple of the bigger syndicators who have done, who have balance sheets north of 100 million plus, so, and have some experience in Atlanta market. So not getting very good feedback from them for that market, this property location. So we'll see. We may have to further cushion our underwriting for that feedback. Maybe good to visit just to get some knowledge. So we'll see where this week goes. I know we have a couple other LOIs out on multifamily that are, Dorchester we're still chasing with Frank. Frank still haven't gotten the feedback. That is gonna go a little slow since it's dealing with the city. The pack it up storage, that LOI went out last week. I don't think we have heard back. Major mobile home park, that LOI is out. I think we have a little gap on the asking versus the offer price. And I think Sandeep is still pursuing that Whispering Pines. Again, there's a little gap on the price, but you never know where that would work out. Back to you.
Gerard, you're muted.
Thank you,
I'm
Mike.
listening.
I was going to say the fate one before you yell at me. I finally got my tax return finalized document yesterday at like around midnight. So they owe me $2,200. So 2023 tax return I filed. I'll push that through. Make sure we get the final documentation. So Fate is coming online. The Lake Creek Retail, we have a call set up. The CB Steward, it is right now hanging in the middle somewhere. We'll see where we at. Candela's pretty much wrapped up, and so quite a bit of activities. I still feel like we're gonna get some of the deals done quick. So for everyone here, as we go through our rest of the week, please stay on your buy box, keep on underwriting, and keep on sending LOIs. Right, that's a conversation starter. And I have a couple of follow-ups to do with you guys, and I'll continue to do so as we go. So overall, our deal flow is pretty good. And I think we're also working on the back end to have a list of the brokers that sent the deal to us organically. Now we're going to go back to them and trying to fork out some of the deals. So for some of those team members, we felt like you guys are ready from the process on how to underwrite, how to talk to the brokers, how to do an LOI, how to send out some of the offers and do some negotiating. Now, for those teams, we're going to give you a list of, or we have a list of brokers here, and we'll say, hey, nurture that relationship because we already made the introduction and continue with it. But this time you go back and stay on top of them so that you can get the deal a little bit faster than the market. And that is being built on Massive Masters. And then on the back end, we'll run the relationship for them. So we will find a way to stay on top of their mind. Then you'll come in and accelerate the relationship so that we handle on the both sides. When a deal comes in, they have a better perception and about us, so we can get the deals faster. Let me go back to agenda real quick. Oh, what do I do now? A second. All right. Mike, you want to give a quick update on your equity calls, equity raising calls that we have every week?
Yeah, that's we're making some adjustments here as we go as well. And I think you gave a lot of most update on the deals anyway right now. So Candela, we've officially closed that for raising capital. We're finalizing documentation to get everything together for final closing, working on that this week. So those that have participated, we're scheduling a call tomorrow or Wednesday to follow up and give you guys more detailed updates on that and what all is going on. On the Horizon, continuing to close out that raise. We still have a little over $1 million to finish out just to replace the capital that was put in. So replacing capital and continuing to operate, manage the property going forward. You mentioned CB Stewart, so I think we're probably 2 to 3 weeks from kind of having final numbers all together there. I know a few people, Sandeep was asking for some underwriting and numbers. Just letting everybody know we're probably 2 to 3 weeks from having that all together and then starting to look at the capital raise there. You guys went over the whole new construction pipeline already. And as far as other calls go, we do have the Pro Money call every Thursday or every other Thursday and on Saturdays. So Saturdays is Saturday setup. Every other Thursday is more Q&A, in-depth questions. texts and tips types of things. And then when we have new deals, we will have calls Tuesdays and Fridays just for like, hey, what's the status on your capital raise? What are you doing? What do you need? And then the last thing is I'm working towards having a new call that we're going to just have a capital raise call that'll be practice pitches. So everybody will get to come. If you got a pitch, take one of our pitches, just come and practice it and get feedback. So we're going to be doing that. So that's it right now.
Mike, thank you. Just to kind of add a little bit to it, that equity will be a key card to play. So understanding the process, getting your system set up, doing some dry runs and mock-ups will be very crucial. So on that note, even though you might be writing underwriting or looking at asset management, the arm that you got to build also on the side is equity raising, which is also why Mike is going to lead some specific calls focusing on that on top of the team calls that we have. So thank you, Mike.
Yep.
So I think we covered almost everything here. So I think, yes, we are on time on this one. That's all we had for today. And Sandra, Mike, anything else, or are we good to go? Let me know.
No, that's good. That's good. Any comments, questions from anybody?
I have something to add. Yesterday, Sharon and I were adding online to look at our broker feeds for mobile home parks. One came available, and we decided it works, back of the envelope, with the seller's offering price. It's in Texas. We sent in an LOI yesterday and received it countersigned and accepted this morning. It's one of those fast pitch things.
Oh, okay, John. You're scaring me. How much
Wow,
extra pay you
nice.
paid? You know
Now,
what I mean?
what size is it, this, John?
It's 50 something. I'm gonna have Sharon come on over here.
Oh my gosh, you see me in my workout clothes here this morning. Anyway, it's a 52 mobile home park down in Aransas Pass. It's being sold by owner, so there are no brokers involved. We're gonna have to, we put in a full price offer with the idea we're probably gonna have some adjustment in price as we go through the deal, because he didn't really have a lot of information for us. But I felt it was a really good park with, it's all tenant-owned homes, city water, city sewer, paved. It just had all the right things. Now we just need to, because it doesn't come through a broker and it's own seller.
Well, he's owned it since 2003.
Since he's selling the deal for sale by owner, I feel we can have a little bit of negotiation in there. But my strategy was get it under contract. Let's do the due diligence. He hasn't provided us with a lot of information, and then we'll work it out. If it doesn't work, it's okay. We'll just move on. But I thought it was better to get it under contract while not a lot of people were aware of it. And we'll negotiate the final price as we go through the deal, and he gets to like us as buyers.
We do plan to pick a date to go to see the park. Again, it's Aransas Pass, so just before you get to Port A on the coast. And we may be inviting some of the individuals who've been part of the MH team to see if they'd like to join us when we do a site visit. So the seller has used it, or a lot of the homes, for his own personal use and personal family use. So provided that he sells to us, well, we've got that opportunity. So that's
John, all I'm hearing is a big beach party. That's all I'm hearing. I can't seem to hear any other words.
I like that idea for sure.
That would be great. This would be great. Awesome.
Cool. Yep, that'd be kind of cool. I own some tracks as well there, so we'll swing by whatever you do. But that seller must have a big family. You got 50 units or 50 pads, a whole bunch of houses. Owned by families. Okay, that sounds good. Good. Congratulations, John. No, this is great. Like over the weekend, you and I connected a little bit. Strategy is different, right? Sometimes you lock it in, work your way down. Sometimes you work your way down first, and then try to lock it in at the on the price that you want to go close it at. So, good stuff, John. I get it now. Cool. Awesome. Awesome. Congrats. All right. So on that note, look, be excited. When everybody's nervous, everybody's scared, everybody's exhausted, this is the time now. Let's pick up as many deals as you get, and so we can make some money down the way. Cool. Thank you, everybody. Have a wonderful rest of the week. I have some follow-ups to do. Please reach out. Please work the WhatsApp groups for any questions you may have, and we'll continue as you go. Thank you so much.
Thank you, everybody.